Now, what does Brexit really mean for the IT sector? Reports are now indicating that this could impact the earnings of the IT companies here in India in the current financial year. To discuss that, we are now joined by Sarabjit Kour Nangra, VP Research at Angel Broking. Sarabjit, thank you very much for joining us today. Good to have you on the show. So, tell us what is likely, going to be the impact of Brexit on the IT sector here in India.
See, IT per se, our view is that in terms of order book position or in terms of order inflow, it shouldn't mean much to companies. Probably a few quarters order inflows might slow down from that region, but I guess so. UK predominantly will, as an economy, I don't see fundamentals changing very drastically actually. And obviously the major impact in the short term will be in the terms of currency. So I guess in currency exposure to EU and EU, which is a major trading currency after US dollar for IT companies, is exposure is only 8 to 9%. So our view is that it shouldn't, besides currency shouldn't have a major boil down effect on the IT companies. And there could be some cost related issues because UK earlier was part of EU, so there are benefits associated with trading with a huge trading block. So those might go, but I guess as far as my understanding, that remains for at least for 2 years. So I guess those issues are there which will come up front, but they will take some time. But near term effect is currency. And that exposure for most IT companies 8 to 9%, not much more than that, and most of them trade in US dollars actually.
Right. So, near-term effect, of course, is going to be currency. There are certain reports, Sarabjit, which are indicating that companies in Europe had started cutting their spending on technology. So, tech spend cuts is something that we, they were being seen much before Brexit happened, and probably now it's going to continue. So, in terms of revenue, then, looking at the percentage contribution as revenue that comes from Europe to big companies here in India, what kind of an impact are you looking forward to?
See, in terms of cut, Infosys had earlier in the last analyst meet, they had mentioned that, they are seeing IT spends being moderate, not very great actually. So that's a trend which is across geographies. So it's nothing very gung-ho that, IT spends were expected to drastically improve. So as you rightly said, it's a trend which is there before Brexit happened also. So to that extent, you will have to be choosy in the space. There are companies which are mining clients very well, like HCL Tech, Infosys, TCS. These are mining clients better than other companies. And with Indian market share reaching up to 60% of overall IT exports, I guess it's high time that investors look into company-specific issues and invest in IT space. So we are largely very positive on large caps because we see that these companies are better placed in comparison to mid-small cap. There could be a couple of them in the mid-cap or small cap space doing fairly well, but I guess predominantly it will be a question of volume, and these companies are, in terms of manpower, in terms of bandwidth, they are better off position to take the advantage actually.
And with this as the backdrop, do you see significant cut in the revenues, at least in the first or the second quarter earnings maybe?
Because of Brexit or because of IT spend?
IT spend cut.
See, IT spend cut, as I said, Infosys has, in spite of the IT spend trend, has given a guidance that its guidance will be managed. So that's why I said you have to company specific, because there are some companies who are doing smart moves. They are trying to be ahead in the game by mining clients which are large scale order book positions. Infosys is booking now clients even higher than $300 million. HCL is getting clients bigger than that. So I guess they are doing acquisitions also, though recent ones have not been that big, but What I'm trying to say, these companies are making sure that they man their manpower very productively and get best out of the resources. So HCL Tech, Infosys and TCS, these are our picks which we think can do at least better than industry growth rate. So these are picks in IT space. So I think you have to be choosy. That's why the tougher the macro environment, you have to be very selective. So that's the mantra to invest in IT right now actually.
And how's the year really looking like at this point in time as far as the entire IT sector is concerned? What kind of earnings are we likely to see ahead?
NASSCOM has already given a guidance which is tad lower than the last year. So I guess I'll go with that. I don't see a severe deterioration of the situation, and as it is, large caps occupy a major share in the industry now to drive the industry growth, and they are pretty confident that they will reasonably be at least able to match the last year's performance. So I guess or better it to some degree because of client mining that they have seen last year. So I guess I think that industry growth rate will remain. There is nothing, I don't expect a very drastic change happening. So I go with an NASSCOM number right now, and I guess industry's productivity in terms of their profitability is reflected in their ROEs, and valuation wise they are decent in terms of ROE and the growth that they are showing right now. So I guess they are picks right now in this space to give a decent return to investors.
Right, and lastly, what's your view as far as the pharma space is concerned, considering Brexit has now happened?
Jivan Jyoti Bima Yojana, so widespread this thing. That I would.
Again, Brexit, Europe is not a major component for pharma companies. US is the major one. If you look at large caps, almost all companies get around 50% of their sales from US. Europe is there, but for few companies, exposure.
India's largest private insurer with a
like Aurobindo and Ipca Labs. Again, business-wise, I don't see the dynamics of that generic industry changing dramatically. The growth is definitely at 4 to 8% compared to tad higher in US markets. But I guess with penetration of generics increasing, that growth rate will also going forward will be lower. So in terms of exposure, it's only Aurobindo and Ipca. And again, business-wise, probably there will be some slowdown in approvals because earlier they had common approvals coming from the EU. So that might take some time, but again that they have a window of again over there 2 years, I think. So near-term performance again for pharma will be dictated by currency.
Of course, currency
so it depends upon so both Aurobindo and Ipca could be at risk over there.
All right, Sarabjit, we'll leave it there. Thank you very much for joining us today and helping us understand the key implication, of course, that Brexit could have as far as the IT and the pharma sector is concerned. So currency is going to be an important factor in both the cases. Meanwhile, the European markets have